algorithmic trading programs, and I've seen statistics at least earlier this year that seem to indicate maybe 70% of market volume is traded off of these big bank trading programs. So you really need to have a way to monitor not only the opinions of people and what they're doing, but also what the computer algorithms are saying, because that will kind of could potentially cascade one way or the other. Now, so what this is looking at is, on a statistical sense, has there been a lot of buying, strong buying at the end of the days over the last however many days, 5 days, 10 days, 21 days, and that's gotten to a pretty high level of buying at the end of the days, so anticipating continued rise in stocks when you look at the 21-day average. Again, that's just showing from a contrarian standpoint that this is a little stretched from the average that it should be at over the long term. This is the American Association of Individual Investors bull ratio, looking at this is a survey showing how bullish or bearish individuals are in the stock market. What this is showing is very high bullish percent, and actually a couple weeks ago went beyond 2 standard deviations away from the yearly mean, something that you haven't seen happen in the last few years. And when that happens, that has typically not been good for stocks at all. So this type of signal will tend to take a few months to reverse, and it tends to be pretty accurate when you're looking at a few week to a few month time frame. This shows the Investors Intelligence survey, which is looking at not individuals but investment advisors on how bullish they are. Again, they're very bullish on the market, which doesn't necessarily mean the market will fall apart. Again, you can see they were quite bullish at tops, but short-term tops for the entire last bull market. However, the bearish ratio of this study, showing how many of the advisors are bearish, actually hit the lowest point since 1987. Hit that point a couple weeks ago. So we're looking at a multi-decade low in the amount of people who are bearish the stock market as far as what they're recommending to subscribers and clients and that type of thing. So from a contrarian standpoint, say that you have a risk that the market has too much bullish opinion here. This is looking at commitment of traders in the NASDAQ commercials, and the commercial traders are in the futures market tend to be the smart money. They kind of have to take the opposite side of the speculators, individuals or banks who don't have an underlying interest. They're just speculating on the price movement. So whenever the commercials have a negative or short position in the market, extremely so, that indicates that there's a large long position in the speculators, and they tend to be wrong at extremes. So whenever the commercials are very net short, so high on this chart, the market will tend to be kind of peaking out for a period of several months, and that's happened again. Seen some high readings late this last year and early so far this year. This is a long-term kind of look at how much cash mutual funds are holding as a percentage of their assets. And again, this tends to be a long-term signal, but it kind of makes sense. If funds have a lot of cash, that is good for the market, because there's money that can come from cash and then be invested back into the market. What this chart will also show you is that as the markets perform poorly, as the markets fall, mutual funds will sell stocks and raise the cash level, which is kind of the opposite you think they should do. When stocks fall, you think they should be a buyer. But any case, one thing I thought was interesting, I talked about on the blog here, is despite the second biggest bear market since the Great Depression, since the 1930s, there was only a move from about 3.5% cash up to around 6% at the March low in stocks. And so I think that could potentially mean that there hasn't really been a major shift in the outlook towards stock. there's still a long-term optimism towards stocks in the market right now. And when you see these kind of once in a lifetime or once in a generational bear market, I would expect to see some more apathy and disinterest in stocks before I think a really good buying opportunity, long-term buying opportunity comes in stocks. And the last thing here, as far as these charts from sentimenttrader.com go, is looking at the Ridex family of funds. And Ridex is a fund family where you can put money in and move money within that fund family without any penalties. So it's kind of short term. It's like a mutual fund, but there tends to be short term. Traders can move around the money depending as what they see fit. And this down here looks at the total amount of assets in bullish funds to the market divided by bearish funds. So whenever a lot of money is going into the bullish funds, the market or the holders of these funds are very bullish on the market. They think the market's going to go up. And whenever that gets very, very high, that'll tend to correspond to market peaks, which happen, you can see back on the chart. And this hit a multi-year high a couple weeks ago, early this year, where looks like there's 3 times the amount of money going into bullish than bearish funds. So again, that doesn't mean the market necessarily is at a long-term peak, but we're seeing several signs from the options market, from sentiment surveys, and from various fund flows that there is an excess bullish opinion, and the market could be at a risk of kind of correcting that excess very quickly.